the market is up 79% of the time. We showed the data. When the Republicans in office, it gets this type of response. When the Democrats is in office, it gets this type of response. Somebody say the show don't start until that thing fall. And every time, that's what happens. We ready to go now. You feel me? So the market does not care. It does not care who's in office. What it does care about is, depending on who's in office, here's the playbook that we get to use. So the VIX is the gauge that, so when the market goes up, the VIX goes down, right? And when the market goes down, the VIX goes up. So this tells us what the market is doing, right? This tells us the volatility in the market. So the market has been so on fire, the VIX has been down, is down almost 2%. Now, watch this, Jose. I'm going to say something that's real dope and something that's real cool. The 200-day is a bear market gauge, right? So, like, if you get a stock that goes under the 200-day moving average, that means that the stock is in a bear market. There's some game for y'all. If you see a stock goes under, for the last 200 days, it has been here, right? And so if the VIX is under the 200-day moving average, that means it is in a down cycle, which tells us that the market is really, really going up. I haven't looked at it yet, but I can almost bet that the fear and greed index is probably either way past neutral or just entering the greed part. I haven't looked at it yet. But based on this data telling me that the VIX is low, I get, based on how I understand information, the VIX is probably heavy on the neutral side, or it's, somebody said, you talking my language? Nah, for sure. It's either heavy on the neutral side or right into the greed side. Just based on this, the market has been running not so much because Donald Trump got elected. The market was up 20% going into the election, which is freaking good. The market is running because the market has clarity. Now, what I will say, there was a lot that happened in that 1 week. We cannot deny that, right? So this man got elected, crypto going through the roof now. Why did it go through the roof? Because he said something before he said, I will be the most crypto-friendly president ever. This is his word verbatim. The crypto people have been dying for this. I'm not mad. Shit, my crypto account up. Shit,
it's a win-win.
A win-win for me. I ain't mad at it. Right? But the market does not like uncertainty. We've been saying that for the longest. So here's what elections do. The market has to figure out which playbook are we going to use going into this new year, and most of all, for the next 4 years. What is the playbook that we are going to use? Once the market identifies the playbook that it's going to use, it takes action. Remember, we said something, George, the market is a what? Forward-looking mechanism. We said this, we've been telling y'all this for years, for episodes. The market is a forward-looking mechanism, meaning the market will reply today based on what it thinks it's going to do tomorrow. Does that make sense, Jose? Right? So the market will rally today based on what it thinks it's going to do tomorrow. And then when the thing that it thinks is going to do tomorrow plays out, the market is already responding to the next set of events that it thinks is going to happen or not happen. Right? So watch this. You can't say that Trump is the reason the market is up when the market was already up 20%. What happens is the market says, okay, bet. Here's who's coming in office. Here's the playbook that we got to adjust to. Because the market does not, here's the thing. Watch this, Jose. The market is up 79% of the time. We showed the data. When the Republicans in office, it gets this type of response. When the Democrats is in office, it gets this type of response. Somebody say the show don't start until that thing fall. And every time, that's what happens. We ready to go now. You feel me? So the market does not care. It does not care who's in office. What it does care about is, depending on who's in office, here's the playbook that we get to use. Then we got to say, hey, here's the companies that benefit from this playbook. That's how we win. When we understand, here's the playbook that the market is going to use moving forward, here's how we benefit from that playbook. As investors, it's up to us to say, okay, let us also pivot. It's not for us. That's why I'll be honest, bro. For me, that's why I keep saying this to people, Jose. Bro, I don't care who you vote for. You have that right as an American citizen. Vote for who you want to vote for, and then let's just get back to the money. You feel me? Like, let's vote for who you're going to vote for. You have exercised your American right. Now let's get back to the bread. That's all I like to say. All right. Let's move forward.
But you didn't explain the VIX.
I did explain.
Well, so a lot of people was asked, like, what they understand as far as it doing.
So the VIX, VIX, is a volatility gauge. Right? So the VIX is a volatility gauge. It measures the volatility of the market. So if the market is going up, then the VIX is going to go down. If the market is going down, then the VIX is going to go up. Why? Because if the market is going up, then volatility is down, but volume may be up. Whereas if the market is going down, volatility now is up and volume can still be up. Does that make sense, Jose? So the VIX is average. See, now you're making me, we talked about this before too, though. The VIX is averaging between 14 and 17. That's the average VIX. So if the VIX is between 14 and 17, then you already know it's typically doing what it does. When it exceeds 17, now you've gotten into a really volatile market or the choppy Red Sea that Peter was on. If the VIX is under 14, you know the market is really on some